Most people believe the future of artificial intelligence will be decided by flashy apps, viral chatbots, and consumer tools that feel magical on the surface. They think whoever builds the smartest AI assistant or the most popular interface will win the next decade. But that belief misses a much deeper truth. The real battle over the future of AI is not happening on your phone screen. It is happening far away from public attention, inside governments, critical infrastructure, and institutions where failure is not an option and mistakes can cost lives, money, or national security. There's a hidden problem that almost no one talks about when they get excited about artificial intelligence. AI does not work in the real world without clean, trusted, and connected data. And most of the world's most important data is a mess. It is locked inside old systems, spread across incompatible databases, controlled by different departments and filled with errors, gaps, and contradictions. AI models are only as good as the data they can see. When the data is fragmented or unreliable, AI becomes dangerous instead of helpful. This problem matters now more than ever because governments and companies are rushing to deploy AI into decisions that affect energy grids, supply chains, military operations, healthcare systems, and financial markets. Traditional approaches to this problem have failed again and again. For decades, organizations tried to solve it with spreadsheets, basic dashboards, or custom-built software that only works for one department at a time. These tools were never designed to handle massive, constantly changing data across entire organizations. They break when conditions change. They cannot explain their logic, and they cannot be trusted when decisions need to be made in real time. As AI moves from experimentation into real-world deployment, this old way of managing data becomes a liability. A new approach has quietly emerged to solve this problem. Instead of building AI first and worrying about data later, this approach focuses on creating a living map of an organization's data, rules, and decisions before AI is ever introduced. It connects information from different sources, checks it for consistency, and turns it into something humans and machines can both understand. This approach does not replace human judgment, it augments it. And it works in environments where accuracy, security, and accountability matter more than speed or hype. About halfway through this story, we need to talk about a company that has spent nearly 2 decades building exactly this kind of system. The company is Palantir Technologies, trading on the stock market under the ticker symbol PLTR. Palantir is not a household name, and for many years, it was misunderstood, controversial, and dismissed by investors. But its role in the global AI infrastructure story is becoming harder to ignore. Palantir builds software platforms that help organizations make sense of enormous amounts of data and use that data to guide real-world decisions. Its tools are used by governments, defense agencies, hospitals, energy companies, manufacturers, and large corporations. What makes Palantir different is not that it claims to be the smartest AI company. It is that it focuses on making data usable, trustworthy, and operational before AI ever touches it. In simple terms, Palantir's software acts like a central nervous system for an organization. Imagine trying to run a country, a military, or a global supply chain with information scattered across thousands of systems that do not talk to each other. Palantir's technology connects those systems, cleans the data, tracks where it comes from, and shows how changes in one area affect everything else. Once that foundation is in place, AI tools can be added safely and effectively. This matters because most AI failures happen at the data level, not the model level. Fancy algorithms cannot fix broken inputs. Palantir's approach accepts that reality and builds upward from it. That is why its software is trusted in situations where errors are unacceptable, such as military logistics, disaster response, fraud detection, and critical infrastructure planning. To understand why this story is happening now, it helps to look at the broader environment. Governments around the world are increasing spending on defense, cybersecurity, and data infrastructure. Geopolitical tensions have exposed weaknesses in supply chains and intelligence systems. At the same time, companies are under pressure to adopt AI to stay competitive, but they are also under pressure to protect sensitive data and comply with regulations. This combination creates demand for tools that can deploy AI without losing control. In the United States, government agencies are actively modernizing their data systems and experimenting with AI-driven decision support. But they cannot rely on consumer AI tools or untested platforms. They need systems that can be audited, secured, and explained. Palantir has been working in this environment for years, which gives it an advantage that newer AI companies do not have. On the commercial side, industries like energy, manufacturing, healthcare, and logistics are dealing with increasing complexity. Energy grids must balance renewable and traditional power sources. Manufacturers must respond to global disruptions. Hospitals must manage patient data, staffing, and supply shortages. In all these cases, decisions depend on integrating many sources of data and understanding how they interact. This is where Palantir's software fits naturally. Financially, Palantir today is very different from the company investors saw a few years ago. For a long time, it was criticized for heavy spending, stock-based compensation, and unclear profitability. Those concerns were not imaginary. They were real risks. Over time, however, the company has moved toward consistent profitability, improved margins, and more disciplined growth. Its revenue is measured in the billions of dollars annually, with a large portion coming from long-term government contracts that provide stability. At recent prices, Palantir trades in the general range of the mid-20s per share, giving it a market value that reflects meaningful expectations but not perfection. It holds a strong cash position, carries relatively low debt, and generates positive cash flow. That financial strength matters because it allows the company to invest in its platform without depending on constant external funding. At the same time, this is not a risk-free story. Palantir's valuation already assumes continued growth, especially in its commercial business. Government contracts can be unpredictable and politically sensitive. Competition in enterprise software and AI infrastructure is intense. If adoption slows or expectations outpace reality, the stock could experience significant volatility. This is not a company for investors looking for guaranteed outcomes. What strengthens the long-term case is the nature of Palantir's partnerships and projects. It works closely with U.S. defense and intelligence agencies, allied governments, and major corporations. These are not experimental relationships. They involve real deployments, real budgets, and real consequences. Once Palantir's software becomes embedded in an organization's operations, it is difficult to replace. Switching costs are high, and trust is earned slowly. Another important catalyst is the company's focus on integrating AI in a controlled way. Instead of selling AI as a black box, Palantir emphasizes human oversight, traceability, and governance. This approach aligns well with how regulators and large institutions think about risk. As AI regulation increases, companies that can demonstrate control and accountability may have an advantage. Looking ahead to 2026, the question is not whether Palantir will change the world overnight. The more realistic question is whether it will continue to grow steadily as the underlying infrastructure for AI-driven decision-making. If governments and enterprises continue to adopt AI cautiously but consistently, tools like Palantir's could become more valuable over time. The upside potential comes from scale and recognition. If Palantir's platforms become standard infrastructure for AI deployment in sensitive environments, its revenue base could expand significantly. Its margins could improve as software deployments scale, and the market could begin to value it less like a niche government contractor and more like a core AI infrastructure company. The risk lies in execution. Growth must continue without losing discipline. New products must deliver real value, not just promises. And management must balance innovation with responsibility. This is a long-term story that will play out over years, not quarters. In the end, Palantir represents a different way of thinking about artificial intelligence. Not as a toy or a shortcut, but as a tool that only works when built on solid foundations. For investors willing to accept uncertainty and volatility, the next few years could be transformative. For those expecting quick wins, the journey may feel uncomfortable. As always, this is not a recommendation or financial advice. It is a story about how technology, policy, and markets intersect at a critical moment. If you found this perspective useful, consider liking the video, sharing it with others who care about the future of technology, and subscribing for more long-form market stories like this one.